Hi everyone, and welcome to our first module in managerial accounting. This module marks a really important shift in our course. For the first part of this class, we've been focused 100% on financial accounting. That means T accounts, journal entries, and all of the formal financial statements like the income statement and the balance sheet. Now we are pivoting to managerial accounting, and it's a completely different world. So what's the difference? And do we need two separate types of accounting? What's the deal with that? So that's our entire goal for this first video. So first of all, let's review what we already know. First of all, financial accounting is the process of recording, summarizing, and reporting a company's financial transactions for a specific period. And we went through all of the journal entries to do that, all of the financial statements like the income statement and the balance sheet. But who are those for? Financial accounting is mainly for external users, though some internal users do use it, like managers and the owner of the company might look at their income statement. But for the most part, these things are for people who are outside the company. So think of investors, shareholders, the bank, creditors, the government such as the IRS or other government agencies also might need this information. And because these external users need to be able to trust the information and compare it to other companies, financial accounting is governed by a strict set of rules. Everyone needs to follow the same rules so we know what we're looking at. A bank needs to be able to compare one company to another, know which rules are being followed in the financial statements so that they can read them. We know these as GAAP, or generally accepted accounting principles. That's the general structure of all the rules that we need to follow when we are reporting to people outside the company. So, and what is the focus of financial accounting? When we're doing our financial statements, they were always looking backwards. It was always historical. It reports on what has already happened, like the last quarter or the last year or the last month. Now, we did use some of that information to look forward, but most of financial accounting is just looking backwards. So, how is managerial accounting different? Managerial accounting is mostly for internal users. And think of managers. So the marketing director, the factory supervisor, the head of the department, or the CEO. And they have to make day-to-day decisions. So what kinds of decisions are they making? For example, how much should we charge for this new product to make a profit? Are we spending too much on raw materials? Should we stop selling a product and invest more in a different one? Do we have enough cash to expand the business next year? And you can see that a lot of these are looking forward instead of backward. To answer these kinds of questions, we need a very specific, customized type of information. And they don't need a formal backward-looking GAAP report. So the income statement and the balance sheet, they don't necessarily need these types of reports. They do need reports, but not necessarily those very strict income statement and balance sheet type things. And because this is just for internal users, the rules that we have to follow are actually pretty flexible. We have rules so that everyone's on the same page. And if we are reporting externally, the rules are very strict because everyone needs to know which rules we're following. We cannot deviate from those rules. If we are looking at things internally, we can change the rules if we want, as long as everyone knows that has the reports what we are looking at. So the rules can change. They're very flexible. And so the only rule is this information useful for making a good decision? And that brings us to the time focus. I mentioned that the financial accounting reports look backwards, and these ones the questions we're answering are actually looking forwards. So it's all about planning, forecasting, and helping the company navigate where it's going. So an analogy to help us remember this difference is driving a car. Financial accounting is the rearview mirror. It's 100% accurate, it's historical, and it tells you exactly where you've been. You absolutely need it to drive safely, but you can't drive a car forward by only looking in the rearview mirror. Managerial accounting is your dashboard and your GPS. It tells you what's happening right now. How fast are we going? How much fuel do we have left? And it helps you plan for the future. What's the best route to get to our destination? Are we going to hit traffic? What decisions do I need to make to navigate that traffic? Do I need to make a change in the route that I'm going? So all of these things can be answered through managerial accounting. You need both to be a good driver, just like a business needs both types of accounting to be successful. So we need both financial accounting and managerial accounting to be successful. So one thing that we're going to look at is, if managerial accounting is so flexible, why do we learn any rules associated with it? Well, we need to learn the framework that everything fits in. Once you get out into a company, you can adjust the framework to fit what your business needs, but we need some sort of framework in the first place. So that's really what we are going to focus on the rest of the semester, is what is the framework that we use in managerial accounting. So let's wrap this up. Financial accounting, it's mostly for external users, people outside the company. The rules are very strict. You must follow GAAP because those external users need to know which rules you are following. And it is historical. It generally looks backwards. Managerial accounting, on the other hand, is mainly for internal users like managers or the CEO. The rules are flexible. We can change them based on the needs of our business and what the managers need to know. And it's generally looking forwards towards the future to help us navigate the different roadblocks that we might hit in our company. So as we move through the next few chapters, remember this shift. We are no longer just recording history. We are now the co-pilots using data to help the company make better decisions for the future. So the future videos that we're going to do, we're going to look at a few of the different concepts to help us start building this framework that we need to understand managerial accounting and the information that we need to make better decisions.